Let's go.
Hello, everyone, and welcome to Zephyr's Adjusted for Risk podcast from the shores of Lake Tahoe. I am Ryan Nauman, the market strategist here at Zephyr. Higher education is really evolving as tuition costs have increased, while some are starting to question the value of a college degree. Well, I have on the perfect guest to talk about this and provide some great insights and tips into the college loan process. But first, today's episode is sponsored by the award winning Zephyr, which helps investment professionals make more informed investment decisions on behalf of their clients. All right, enough from me. Let's go ahead and get started and move on to the star of the show. I'd like to give a very warm welcome to John Falb. John is a president and CEO at Edvisors. John, thank you so much for coming on. It's an honor to have you. I'm really excited about this conversation. It's going to be a good one. And I know I'm going to learn a lot, as will our listeners. So, can you please tell us a little bit more about yourself and Edvisors?
Hey, Ryan, thanks for having me. Appreciate it. Higher education has had a lot of changes recently, and there's lots to talk about. So, Advisors is a company that's focused on helping people find and pay for college. On our website, you'll find tips and tools, calculators about how to choose a school, when to start applying for scholarships, as well as private student loans, federal student loans, and all the pieces that families really need to think about when they're looking at higher education. We've been doing this for over 20 years and have a great team of people that focus on the content. And so hopefully we can provide some good guidance.
Yeah, fantastic, John. It is, you mentioned about how it's changed higher education, college, the loan application just getting accepted. A lot of things happening in higher education, in college. Let's just talk about some of the trends. Let's start there with, let's say, the student loan space and just higher education. What are some trends you're seeing play out now and maybe into the future?
There's been a real change in the federal loan program. So the One Big Beautiful Bill has eliminated the Grad Plus program, which was a program started about 20 years ago. So that program in particular is probably the biggest change, and there are others. But the loan limits for Grad Plus students were based on the full cost of education. And the cost of education really is tuition, fees, books, room, board. It covers everything. And so in that program, they have changed it to be $20,000 per year for graduate students, up to $100,000 in total. And then professional students, which are your lawyers and doctors and various other professional degrees, typically requiring a certification, those limits are now $50,000 with a $200,000 aggregate limit. At the same time, the Parent Plus loan, which is for undergraduate students, has been reduced to about $20,500 and has other aggregate limits as well. So I think that is having a real shift with schools in terms of how those families can afford tuition and the full cost of attendance. Along with that, there's several other changes, which is schools needing to look at loan limits based on programs, something that schools haven't had to do before. So we're getting a lot of calls from schools to help them understand their federal student loan performance. And at the same time, I could go on and on about this. You've got demographic changes. So student visas are getting harder to get. So you're having less international students. The US demographic of young children is actually trending down. And so we're seeing potentially a shift for families and ability to get into those great schools. We're seeing schools waive application fees. We're seeing in some states and programs, schools automatically admitting students based on their high school transcript data. So there are a lot of changes and things that I think actually can be helpful for families on the admittance side, but at the same time, less aid, less loans for students. So there's a lot of changes.
Yeah, that's interesting, John. I wish the easier admittance programs and stuff were around a long time ago when I was applying to college. As a lot of people know, I didn't exactly get accepted to many universities. I went to St. Cloud State by default. So I wish maybe there was more flexibility back in the day. So that's
Was
interesting.
in this, I was in the same boat. I went to Highland Park in Dallas and wanted to go to UT Austin, and I actually ended up going to Austin Community College where they had a program where you do 2 years and get I think a 3.5 average, and then you can go to UT. I didn't have a straight path. And in fact, I ended up taking a few years off and working, and then ended up going to San Diego State. But at that time, I was old enough and an independent student and was able to take in-state tuition. Every family has a different path, every student, and families need to consider what their goals are with higher education. If you look at a private institution where you're looking at $400,000 in total 4-year cost of attendance, those numbers really add up. Schools and tuition have generally been twice the rate of inflation for the past 30, 40 years, and it's somewhat unsustainable. Schools having to take a good look at their budgets, families looking at their budgets and what value they're looking to receive out of a higher education.
Yeah, John, it's interesting. It's not linear, right? And everyone's different. And to be honest with you, well, out of high school, I love the University of Wisconsin and Madison, but they wouldn't have even let me close to campus. So, I had to take a different route. And looking back at it, sometimes it's maybe I should have went to a JC or a local community college first, save some money, and then started too. So there's a lot of different options. Like you said, it's not about just going into your dream school, even though now you might be able to get accepted into more of those dream schools, but the price tag might be more expensive. Seems like there's a give or take there in deciding what route to take. Yes, you could get into that great private school now that maybe you didn't 10 years ago, but that private school, like you said, is now $400,000. Is it worth it? So, how can families consider during that process and try and decide if a college degree is appropriate for their children when costs are higher, but maybe they can get into more schools?
Yeah, I think the flexibility in admissions, which we're not really seeing yet, high school students will start to, I think, feel like that it's a little bit easier, a little less pressure to be able to get into those schools. But Wisconsin's a good example. So if you were to choose between Wisconsin and, I don't know, USC, in-state tuition at Wisconsin's about $12,000. If you were to go to Wisconsin out of state, it's more like $44,000. So that's a big difference. And then going to a private school like a USC, it's more like $73,000. So that's where you get to the $100,000 number, round number for 1 year of a private school without any aid.
Yeah, go ahead.
I was just going to say that really depends on the family, their goals, and the students' goals. I talk to families all the time, and thinking about the costs and thinking about how to pay for it are lower on the list. They're more excited and more willing to do whatever it takes to pay for the dream school that their child wants to go to. And I think that's admirable. I just think that you also have to consider what is the overall return on that investment. So if it's going to end up costing you several $100,000 to get a degree, what degree is your student or your child pursuing? If they're pursuing a dance degree, that may be a tougher sell than looking towards an accounting degree, a much more practical and applicable degree where you'll get a job and could lead to an MBA and on from there. So those are the kind of decisions that I think families need to have before they pull the trigger on which programs they want to go to. And in fact, this is beside the point, but there are a lot of trades and trade schools and significant demand for those degrees, much shorter programs. And so if those children are more apt to go that route, I think we'll see a trend towards more folks choosing that over a traditional 4-year degree.
Interesting. I've been reading a lot about that and seeing a lot where those trade schools, tech schools, and those occupations, like you said, they are in high demand right now. And as the economy is expanding, more infrastructure is being, so those tech degrees and, like you said, in those trades are in demand. So, like you said, do you need to go to a 4-year, $100,000 a year school for that? Sure, it looks great on your resume to have USC or something like that on your resume, but like you said, is it appropriate for
Yeah,
that?
for sure, a 4-year or graduate degree is going to lead to a much higher lifetime earnings potential. And many jobs in the corporate world require those degrees. Some don't. But when we look at AI as an example, there's concern about that taking over people's jobs. When robots started to come into fruition, we thought all the manufacturing jobs were going to go away. But what happened is we still had about the same amount of jobs. It just changed what those jobs were. And so I think the same will be hold true with AI. But I think you and I know AI isn't going to be able to come and plumb a house or fix your electricity. If you look at the lifetime earnings, you may be able to be earning under the six figures during that 4-year period after high school with various trades. However, after 4 years of college, you may only be looking at $70,000, $80,000 as an accountant, as an example. But your earnings potential could be much higher. So it just varies. Those are good things to think about.
Yep, you're exactly correct. So, how can financial advisors, this financial advisor show our audience is primarily financial advisors, how can they help families and their clients with this discussion on education and potentially paying for the school and saving for it, and just what role do they play?
Yeah, so let's lock into what I think most of your listeners are going to be interested in, and that's helping families figure out how to pay for college. What is the best way to meet the goals of the family? And there are a lot of resources out there. Edvisors.com is one of them, providing education about the process. Financial advisors are going to be managing families' money. And so they're going to have the means to be able to pay these bills, most likely. But what's the best strategy for that? Really, you can start by helping to pay for college before you're even thinking about which school to go to. And that is applying for scholarships. Scholarships are free money. We give away thousands of dollars every month at Advisors, but then we have a list of all the other available scholarships, and there's other resources to apply for scholarships. So you could have tens of thousands, if not more, in scholarship dollars before you even apply for college. And those scholarships dollars typically would go into a 529 plan. And a 529 plan is something that you can think about investing in even earlier at the time a child is born, putting away a small amount of money every period, whether that's every month or every year. And that money grows tax deferred. So any appreciation that you receive, you are able to withdraw for education purposes on a tax-free basis because when you put the money in, it was already taxed. And so that's a good way to grow a savings amount to pay for college. Obviously, choosing the right school. And then once you've made that decision, completing the FAFSA. So it's done through the application process. You have to apply for financial aid. And if you think about families that have means, they may choose not to apply for financial aid because, they can pay for it. They don't need to apply for financial aid. We recommend everybody apply for financial aid and apply through the FAFSA. The FAFSA is the free application for federal student aid. that process goes through the school. So the school is in their financial aid office are going to be able to review that. Now, that does require the families to submit their tax information, and they're going to evaluate your income to determine how much aid you could get. But also, it allows them to look at you for merit based scholarships or tuition discounts. And when you look at a lot of schools, they may have a $70,000 tuition price tag, but their average is more like 25,000. So they're actually covering a lot of students and discounting that tuition. And it depends on the type of school and what your family situation is. But that free application for federal student aid is going to trigger a number of things, and including what federal student loans you qualify for. Anybody can qualify for unsubsidized student loans. And an unsubsidized student loan is a loan to the student. Those limits are relatively low. For freshmen, it's 5,500, and then it goes to 65 and 7,500 as you matriculate. But that's a loan to the student. And what I've done with my family and what I did when I went to school is I took an unsubsidized student loan. It's not based on your income. It could be one of the first financial products that a student can get all by themselves. So they apply, they sign the promissory note, they're going to receive statements. That loan will accrue interest while they're in school, but it's a good financial lesson. It's a good way to educate your children to understand what it means to borrow money. And sometimes borrowing money is one of the better tools to use instead of taking out your savings or your investment portfolio. Things could be, timing could be off or whatnot. And then you could always pay that off for your child if they hit certain goals like graduating and getting a job. And then there's unsubsidized, which is need based. So you can borrow up to I think it's $7,500 per year as a student, and the interest doesn't accrue. So that's if you meet the financial obligations or hurdles with that loan. And then there's the Parent Plus loan. And the Parent Plus loan today, there's a 4% upfront fee, and it's about a little over 9% interest rate. And that loan is again capped at the $20,000 per year, but it allows parents to ease some of the financial burden and not make that upfront payment. But payments do start to be required 60 days after the second disbursement. So generally in March, April timeframe for most school schedules. And then to the extent you exhaust those federal programs, there's a whole world of private student loans. And private student loans are typically co-signed. They're loans to the student, but it's based on the parent's credit because most students don't have jobs and they don't have an ability to repay. And those lenders are looking at the ability to repay to determine what interest rate there is. Interest rates today for private student loans are anywhere from under 3% to 17.5%, depending on your credit and income. So there's a very wide range. And those payments won't start until after the student leaves school, hopefully after they graduate. And then 6 months later, you begin repayment. And then hopefully the student gets a good job or the parent can help supplement those payments.
Yeah, John, that's fantastic. When we talked earlier, I had mentioned when I went to school, my dad paid for the first 2 years, and of course, it took me 5 years. So those last three, I took out a loan. I don't remember what type of loan it was, but it really helped me because I was paying for this. And the one thing I could do is I might not be good at taking a test, but I could go to class. And I knew that's what I'm paying for. So I'm going to go to the class every day. And like you said, it's your first, as a kid, your first really liability of paying back and teaching you about money and loans and how you have to pay it back and interest rates. And I had mine deferred after college because the programs, it's a great learning experience too.
Yeah, I did the same thing. And fortunately, I was able to pay it off. And I didn't have to borrow very much because I had in state tuition. For some families, taking a private loan could potentially be better than a federal loan, but the federal loan does have more flexible forbearance periods. They also have repayment plans. The new repayment plan for federal loans is called RAP, or the Repayment Assistance Plan. That hasn't been fully fleshed out in terms of how that works, but historically, there are two primary plans that allowed you to have your student loan, your federal student loans forgiven after 20 years of on-time payments. And then they had a special program for people that served in the public sector. So if they were working as a teacher, certain hospitals or other public sector jobs, after 10 years of on time repayments, those loans would be forgiven. So those were pretty attractive programs.
Yeah, for sure. So you talked earlier about it's like a teeter totter. You can potentially soon getting into colleges might be more lax and easier, but cost is going up. Should the availability of student loans and other programs for, say, your kid impact the decision on what college they should attend? Or what do you think is most important? The degree and what college to attend, or the potential for getting student loans and the price tag?
That's a good question. I think, again, every family's different. So, for example, I have a senior in high school and he really wants to play baseball in college. He's very strong academically as well. So, our challenge was we really felt that academics was most important. So the quality of the academics, and he wants to be in business and he's highly motivated, unlike my older son who was less motivated. And he got an offer from Williams College in Massachusetts to play baseball. It turns out it's also one of the highest ranked academic programs. For us, it hit both things, but it really depends on what you want for your children. I think when you look at people well into their career, there's certain schools that may help you with job mobility. Having a Harvard on your resume is always going to tip your resume up the scale. I went to a state school and I think I've had a great career. And I ended up getting an MBA from the University of San Diego, which obviously helps as well. At the end of the day, everybody has their own path. And usually things work out well with people. If your children are hardworking and want to have a good career, they will find a path and they will find their way.
I completely agree. So you talked a little bit about the process or the different things families can go through, like the FAFSA and potentially saving for a 529 plan and federal versus private loans and grants. Can you just maybe, what's the process families should go through when deciding which college to attend, like in terms of financing and loans? And then just where is there a process that you recommend and approach that you take?
The process and the best way is really to start early. Start that 529 savings plan. You can also withdraw without penalties and tax from a Roth IRA, so not dissimilar to a 529. And then analyze the value of the education depending on the costs of the school that your child wants to go to. And then really working with the financial aid office. They're going to be the central hub for helping make all of your options available. Applying for scholarships early, starting when you're 16 generally, is a good time to start securing some of that free money. And then the financial aid office may have other scholarships, merit-based aid. There's also work study programs that can help offset those costs. Negotiating tuition with an admissions office is difficult. If you can, why not? You don't know what they might say. But for families that really can't afford it, there are a lot of schools that say, look, we will we will provide enough aid in the form of discounts to ensure you don't have to take any loans. And so it really depends on their situation economically, but the financial aid office is always good. And then educate yourself. Go to edvisors.com, look at all the free content and resources, and just understand the process.
Yeah, I think that's fantastic, Giant. Really a great way of bringing this conversation full circle. Last question, and it goes back to, I think you answered it earlier, but again, for financial advisors, any tips for financial advisors and families going through this process that might be often overlooked that you can maybe give them a little bonus tip here?
I think one of them I already mentioned, which is the Roth IRA. I think IRAs are something that financial advisors are often talking to families about, 529 plans, and then really shopping around. So if you're going to take out private student loans, just don't go to one lender. There are for profit lenders, there are a few banks, but most banks are not making student loans these days. And then there are state based agencies. So, depending on the state you're in, you can get much more favorable rates because those states are issuing tax exempt debt to fund their student loan programs. There's also credit unions. Credit unions sometimes have more favorable rates as well. So EFC has a broad array of members that are all state-based agencies that are providing student loans. So even if you are located in a state that doesn't have a state-based agency, let's say you're going to UPenn, FIA is a state-based agency that has their own loan program. And they offer loans that typically are a bit lower than the banks or the for-profit institutions. I think you'll see more lenders focused on this space because the loan limits for the federal program are going down. And I think there'll be some more options in the coming years.
Yeah, John, that's fantastic. I just listening to this conversation, I just keep thinking to myself, like you said, it's just not really black and white. You need to do a lot of research, digging in. It sounds, and it's true that Advisors is a perfect starting point place to get that research, get content really to help you through this journey that is very important and costly, right?
Yeah.
So thank you so much, John, for coming on. Real quickly, you mentioned it, but where can our audience get more information about Advisors?
Yeah, the easiest place is edvisors.com. So edvisors.com. And we have free information about finding and paying for college there and are available to answer any questions.
Fantastic. Thank you so much, John. Great conversation. And thank you, everyone, for listening to this episode of Zephyr's Adjusted for Risk podcast. You can watch all of our other episodes on the Zephyr YouTube channel and Spotify. Please be sure to subscribe to those channels and give us a follow on LinkedIn. Thank you and have a great rest of your week.